think we are launching the index fund, and this will mirror the Nifty Auto Index. That is our benchmark. So, as Ram has initially indicated, this is a massive opportunity in the sector. I mean, we are still at a very nascent stage of the evolution of the sector. So, as you can look at the various numbers presented here, like I said, total size of the market is as of now is around 20 lakh crore. We have a market leadership in two-wheeler, three-wheeler, and if I go by the numbers, even tractors as well. Then we have if I look at the manufacturing share of automotive in the country, it's roughly around 49%. And in overall share of auto components in export is roughly around 18%. If I look at the job creation angle, then this segment is actually creating the 30 million jobs, direct, both direct and indirect. And then in terms of revenue contribution to the government, etc., if you look at the this segment or this sector itself contributes roughly 15% of total GST collection across the country. And what are the key factors which is influencing the segment growth and segment evolution is basically the increasing per capita income, as Ram has mentioned just now, that we are still at a nascent stage and we are per capita income is much lower. As we move towards a middle income level, and beyond that we will move to probably to the high income level, then the need for automotive, the need for mobility in terms of vehicle, etc., will keep rising, and we will see significant change in behavioral purchases as well, because as of now, because of our low per capita income, our size of the vehicle, our the per vehicle cost or per vehicle revenue is also much lower, which will also going to change as we are seeing more SUVs here, more premium models in whether it's in two-wheeler or whether it's in car is selling higher as we move towards the higher income category. And this is not only the domestic consumption. This also have a lot of potential for export because uh, as an ecosystem, I mean, if you can just draw corollary from say Germany or Japan or even now China, I mean, these countries are very high exporter of automotive products. I mean, historically, Germany and Japan was the very large exporter of automotive components as well as vehicles, and now with the advent of China, we are seeing globally across the world, they are gaining market share with the new technologies in automotive side. And apart from that, the government policies, because this is a large contributor to the GDP as well as manufacturing, government has always talked about more make in India, etc. Then I think this is one segment or one sector which is a low hanging fruit, and that has to contribute significantly. If our manufacturing share has to go up in overall GDP, then automotive sector has to go significantly. So even if you look at the developed market where like say the US or Europe, etc., automotive is a core part of any of the manufacturing push of any government. So, so from that angle, I think the government policies will also be enabling. Then we have the capex support. So capex supports are not only from the company side, but as well as the government side in terms of widening of new road building, etc. Plus the focus on the various PLI scheme, etc., and the government support for new technologies. Then we are talking about this technology. This segment is also transforming in terms of various technological evolution. So what we are seeing in the last 5 to 10 years, last basically more 5 years, if I have to correct it, then last 5 year we have seen lot of advent and lot of movement towards cleaner technology, cleaner energies segment. So the EV has grown meaningfully across the world, and which is more predominant in China and to some extent even Europe. And we are also talking about, I mean, the we are also seeing the advent of driverless car, and I mean the autonomous driving, etc. So, which is a key growth driver for various developed market like US and Europe, where you don't find the cheap labor, etc. So I think from that perspective, this has a very interest. I mean, there is a interesting time for this segment, and as we have mentioned earlier, that this segment contributes significantly to not only to the manufacturing but also to the tax collection, to the employment generation, etc. So the government is very focused on the development of this sector, and this is what was visible when we see that last year there was a significant reduction in the GST GST rate for this entire segment. And as we see more, as we move forward, why we think it's a still in a low category of development or is still in a early stage of evolution? Because if you look at the vehicle penetration is very very small compared to the various developed market. And as our in the last 10 years, you see the per capita income has probably closer to, I mean, it has doubled now. And if I look at the various export market, various market outside India, we have seen significant growth from when the per capita income touches something like $3,000, etc. Then this vehicle penetration, etc., goes up significantly. And this is what has happened in China, and which is a very recent example, which is happening in Indonesia and some of the Asian market as well. That post $3,000, the vehicle car penetration, etc., jumps significantly. And as a market, we are still at number three level in terms of the penetration. I mean, number of vehicle manufactured, maybe in the car side or in the four-wheeler side, which is below US and below China and US in terms of the production. But I mean, the before going to that number, I mean, just the key drivers for this segment is why we are thinking this premiumization and disposable income will fuel higher penetration of various segment of the vehicle, as well as more premiumization and more luxury or more premium vehicles selling higher in terms of overall mix. So, based on the various research, I mean, shown by different agencies or different broking houses, etc., what we had in 2021 in terms of our household income level, we will see significant change in the category of household, where we will see $35,000 and above category of household will be up from say 2% to 7%, and 10 to 35,000 category is growing from say 24% to 46%. So this is a one area which is make us confident that the segment will grow significantly and segment will have a more premiumization, as well as the size and scale which we are talking about earlier, which we have talked about earlier, about 20 lakh crore market, can be significantly higher than what it is. So you can see this the vehicle penetration on different categories. So two-wheeler, we are still at lower level than various of the Southeast Asian market, and I think there is a still room to grow significantly. And this is also a category where we are world leader in that, in terms of total overall manufacturing as well as export. So, and even in passenger car, we are very, very at a nascent stage. We are roughly around 30 odd car per thousand population, while the various developed market has 500, 600, etc. Even if we reach to something like China level, our car volume number should more than four time become more than four time from the currently what we manufacture. So that's why we are saying, I mean, this 20 lakh crore market will be much, much bigger in a long period of time. So I was just referring to the in terms of the country's share in global passenger vehicle sale. China is at the highest at 34%, with one similar, I mean, slightly or lower or similar population as of now, but their per capita income is much higher. So that's why you see the China sale is 34. US is roughly at 18 and India has just outgrow the Japan last year when we moved to third place. But because of the population and the opportunity, we have a bigger potential in this segment going ahead. So similarly, in the top five countries, share in the global commercial vehicle sale, you can see China at 29%, US is 10%, and India is at 7%. So this all the segment, wheeler, passenger car, or commercial vehicle, etc., everything has a lot bigger potential in terms of volume and in terms of growth. So as you see here, in terms of the export, uh, uh, we have a 24% volume growth in the total export volume in terms of in automotive segment, which is roughly around 3.5 lakh crore worth of export. Sorry, we have done from the automotive sector, and we have a very low share in terms of the passenger car and as well as the commercial vehicle in the global export market. Excuse me. Yeah. And in terms of the top export geographies, we are predominantly to Africa, Latin America, and Middle East. I'm sorry, just a minute. Yeah, sorry. So in terms of the export, we are predominantly selling to the geographies like, say, similar low developed market, I mean the or developing countries or the low income countries, mostly in the Africa, Latin America, Middle East, and to Southeast Asian market. And as I pointed out earlier, we are the largest exporter of two-wheeler from globally, and similarly in the three-wheeler space. But our share in the exports here in the PV and the commercial vehicle industry is still lower. I think as globally the emission norms converges with the various segment, I mean the various countries, we have a large export potential from commercial vehicle as well as passenger vehicle as well. Because if you look at the last many years, I mean the last few years, many of the global OEM which has present in India have designated India as an export hub for various of the emerging markets as well as the developing countries. So now let's talk about the theme contributing the overall growth. So one is faster commute and develop increased connectivity. As we see, the over 5 lakh kilometers of road length has increased in last 5 years. Increase in the national highway has been roughly around 10% between 29 to 24. And around 99% of habitation is now connected by the roadways or the road network. So, and with the multiple economic corridors we are building across the geography, so the growth for the sector is driven by that. I mean, one of the key driver contributing are the connectivity and the road network widening, etc. And then we see the rise in the e-commerce industry, which is the as you see the various projection of, say, electric two-wheeler is expected to grow from, say, 3 lakh 44,000 to around 2.2 million because of the e-commerce or the quick commerce penetration, etc., from, say, 25 to 2030. And similarly with the e-three-wheeler, which was in FY 25 was roughly around 70 or 1,000. which is expected to grow to around 3 lakh 21,000 by 2030. Similarly, if I talk about the electric four-wheeler, which is just around 2,000 odd numbers in FY25, which is expected to go to around 90 odd thousand by FY30. And here on the right hand side, you can see what has the technological advancement and how the fuel mix has changed. So India is a net importer of the crude oil, which we are, I mean, with the recent war incident, etc., which we have seen. We have mostly we importing around 75 to 80% of our crude oil need is getting imported from the various geography, either Middle East or Russia or US or various, I mean, Venezuela, etc. So, which is uh, and the government focus has been over a period of time to reduce the import. So that's why they want to increase the diversity of the fuel mix. So we can see the petrol, which was roughly around 75%, now is closer to around 60 odd percent. Similarly, diesel has been steady at roughly around 17 odd percent to 19%, 17 to 20% zone there mostly. CNG, I mean, which where the government is focusing a lot, has gone from say 18%, 8% to 18% now. And similarly, the EV, which was almost negligible in FY21, is now roughly around 5%. And hybrid technology, which was also negligible in 5 years back, is now around 2 to 3%. And recently, you might have seen various flex fuel launches by various OEMs, so as pushed by the government, where it will be mostly the ethanol driven vehicle, etc. So the government and the industry is going to diversify in various segments, and as our fuel dependency purely on EV will get reduced, and that is where we will see technology and various efforts of the government will going forward will happen. So in terms of government policy push, we have seen various PLI scheme, which is running for the EV based manufacturing, is roughly around already 26,000 crore has been allocated, and this scheme will be ending in FY28. I mean, one and a half year of I think 2 years. Broadly now, 2 years is still left in the scheme, which has been part of initiative and done in FY22-23. Similarly, on the demand side incentive, which was the earlier named as FAME, has been now moved to PME Drive. So the government's support or government uh, support in terms of various incentive for electrification or for the alternate fuel technology is also is there meaningfully, and the government, as we have earlier talked about, the government push and overall development of the sector. And I have also talked about the old GST, I mean the GST structure, where they have significantly reduced the GST across the board, and with the alternate technology or the new electric vehicle, etc., we are seeing significant lower GST rate to drive the growth in those new technology areas. So this is the EV transition opportunity, and uh, in EV penetration, if I look at the recent number of FY26, it's roughly around 7 odd percent, which is significantly lower than the world average, which is around 17%. And if I look at China, which has moved to roughly around 60 odd percent, closer to 50, 60% in the various category, if you look at the various categories of the vehicles. And with the rising cost of fuel, EV, which is predominantly working on the electricity available, uh, the EV adoption, etc., will gradually increase. And as we move towards more localization, more domestic ecosystem development, I think this will continue to rise. And as per the government target, I mean, they have targeted around 30 odd percent EV sales by 2030. And if I look at the various scheme of the government, I mean the PME Drive also have a large component of EV charging network expansion and the growth, which has been one of the critical area where the government or the public sector, etc., has to invest because the range anxiety as well as the lack of charging infrastructure was one of the key determinant, I mean the one of the key issue in the EV adoption in the country. So this is the government automotive mission plan 2047. I think the government is talking about around 20 odd billion dollar of export, which I mean the current export to they want to make it around 3% of the global export. And if you can look at the numbers, I mean this number is very huge. So they are talking, even if I look at say 2025 to 2030, all these numbers in the automotive segment revenue, they are talking about 2x, more than 2x, as well as even in the auto component side. And there is a large tailwind for the auto ancillary because as we see, as we have talked about premiumization is not only from say a small car to SUV or from say 100 cc motorbike to 300 cc motorbike. It's also in terms of the features. I mean the features which we are getting in the vehicle, which will significantly raise the content per vehicle for the overall segment or overall sector. So, like say four-wheeler, will see as we have seen as we have point plotted here, the the automatic transmission in the cars, which used to be just roughly 5%, few years back has now moved to around 30 odd percent. In the SUV, the sunroof side, we are now around 40% penetration in the sunroof, along with the alloy wheel, which is also roughly around 50 odd percent. So various, I mean, the LED lighting, which was considered to be a premium feature, is now getting more mainstream, and now roughly around 35% of the cars is coming with, or the two-wheelers is coming with the LED lighting. And similarly, we can talk about the connected features. I mean, most of the vehicles are now getting connected, and I think in 4 5 years, we will hardly see any vehicle without the connected uh, vehicle features. So we have talked about still at a nascent stage. So, what lies ahead is the increased penetration, changing consumer behavior, rising per capita income with nuclear household, and global reach and the government support. So, all the ingredients of a multi-decadal growth as well as the opportunity lies ahead for the sector. So, this is a index fund, and the index as of now is, I think, the is roughly around 50 stock is part of the index. This is the top 10 constituent of the index, which is driven by the large caps, etc. So as of now, the weight of the index is predominantly large cap driven, around 99 stock, which is in the large cap space, is constituting around 83% of the weight. Mid cap is roughly 12.8%, and small cap is roughly 3.8%. And similarly, with the various categories of the vehicles, I mean, passenger car, utility vehicle, two-wheeler, three-wheeler, auto components, and the commercial vehicle, you can see the index constitution. And this index has, even if you look at 1 year, 3 year, 5 year, 7 year, 10 year, 15 year, and since its inception, every period this has broadly outperformed the broader Nifty 50 index, so which is referred in the chart here. And even on the calendar year return basis, also they have outperformed across various periods. And in terms of the risk reward and in terms of volatility also, you can see the risk weighted return has also been mostly positive for the sector, barring one period uh, in the chart here from 1 year, 3 year, 5 year, 7 year, 10 year, 15 year, or even the since inception stage. And if I look at the valuation of the index, I mean the Nifty Auto Index is broadly at around 22 times forward P, 1 year forward P, while the Nifty 50 is broadly at around 18.9, 18.6, or I mean broadly around 19 we can talk about. So I mean, the valuation has been slightly on the higher side, but because of the higher growth and higher quality of the companies, etc., and the large brands, etc., the valuation has mostly been on a higher side, and which is, I mean, also despite that, I mean, the if you look at the return, they have always outperformed the in any time period. So why invest? So, because I mean, if you look at the since inception or last 15 to 20 years data, this segment has always outgrown, and this has always performed better uh, compared to the broader market index. And we are still talking about the nascent stage of the evolution of the segment, and there is a long runway of the growth from say 20 lakh crore market to multiple. I mean the maybe I mean 3, 4, 5x. I mean it can be significantly much higher from the in next 1 to 2 decades. And as our aspiration as well as the per capita income grows, then the aspiration of owning vehicles, aspiration of owning cars or the two-wheeler, premium two-wheeler or two-wheeler will also be much higher. And with this scale, what will happen is because of this sheer scale, we can be very, very large export hub, because if you have a very large ecosystem of manufacturing, then you're automatically becomes more competitive in terms of pricing, more competitive in terms of cost structure. So the export opportunity also is a very, very strong tailwind here. And as I have talked about, we are number one in the two-wheeler and the three-wheeler export globally. And the government, I mean, this is also aligned with the global, I mean, the government's micro story and as well as the manufacturing stories. And uh, as we have already talked about multiple times on the under-penetration, the new shift towards the new energy vehicles, premiumization and export growth. So it's a multi-decadal runway of growth. So I think it's not a highly penetrated category. So we can still say that there is a long runway of growth, and this has a large and mid-cap exposure. I mean, higher exposure to large and mid-cap. So I mean, and the quality of the companies and the cash flows of the companies are very, very strong. I mean, this has not been in this cycle, but this has been demonstrated across the cycle if you talked about for last 20 years or so of the evolution of the segment. And what is this is our strength. I mean, we have trusted for around 20 years for the index solutions. We have broader product basket I mean, why to invest only in SDFC AMC fund? So we have a wide product portfolio, and we are one of the largest in the across several categories of the funds. And this is the scheme detail. So I
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.